had a really good performance now, first 10 days of April, and we just wanted to update you. So for those of you who are not members and are watching this, if you want to avail of a free trial, just click on the register button on the top right hand corner of our website and you'll be able to get a 7-day free trial. Okay, so let's get stuck into the portfolio. This is our positions at the moment here, a lot of stock and option positions. So very quickly, we're just going to go and get a report first of all as to how the portfolio has performed for the first 10 days of April. So we're logging into our account management system. This is a great thing about Interactive Brokers and the reports you can pull down here. So we're going to click on reports, activity, statements, and we're going to pull down a custom date range here. So we're just going to look at the report or the performance for the first 10 days of April. So from April the 1st to April the 10th, and we click on view. So the report to be generated now in just a couple of seconds. And we're going to just look at the net asset value. So as you can see, as at the end of business, really on the 31st of March, between all of our positions here, the value of the account was €69,000, 466. And now at the end, it's worth €71,000, 279. So all in all, that's a profit of €1,812 or 2.61%, which is really impressive. So when you consider the benchmark index, the S&P 500, same period of time, only achieved a profit of 1.6%. So this is a portfolio managed by our members and ourselves, and it's delivering returns which are beating the market, which is really, really impressive. So we're going to go back to the portfolio now and have a look at some of the stocks that are performing the best. So we're going to sort here by unrealized profit and loss. So unrealized profit and loss is really the positions that are performing in a profit position at the moment. They're unrealized. We haven't taken the profit off the table, so that's the reason why it's unrealized. So Allianz is still our best performing stock. It's up €1,123. That's really impressive when you think about it. We only invested about €2,500 in that, so that's all up almost 50% for us at this stage. We have an option position here. It's part of a combination strategy. So we won't look at that at the moment. We'll come back to our options positions in a minute and we'll group them together. We'll just go through our stock positions for now. BMW has performed really well, and you're going to find this. An awful lot of the European equities have been outperforming their US counterparts since the turn of 2015. So AXA has done really well. Vivendi has done really well for us. So the one thing to note about this is that we have small weightings in each of these stocks, and I just want to show you a little feature on Interactive Brokers here as well. I'm going to bring that into focus for you. So you're going to see what we call a rebalance tool here at the moment. Again, some of these option positions, don't worry about them, they're part of combination trades. But really what I want to show you is just in terms of our stock positions. So if you look at Allianz here, for example, we've only 5% of our portfolio invested into this. That's been a smart investor. You don't put everything into one basket. Bed Bath and Beyond, we've only got 2.4% invested in there. BMW, we've only got 4% invested. You're going to see high numbers here. They're combination option trades. Don't worry about them for now, but we're trying to give you a message here about being diversified in your portfolio. And when any of our positions rise substantially and we feel that they need to be reduced, we will sell some of our portfolio off. So we just wanted to show you that as well. Okay, so we're going to group. You're getting the message here. Not all of our positions have worked out, and just if you scroll down here, Hewlett Packard has lost for us. We still believe in that stock. We still think it's going to go well for us going into the future. But at the moment it's not performing very well, and that's more evidence and reason why you should diversify your portfolio across a number of stocks. So the reason is enough more of your winners will offset some of your losers. So at the moment in total our unrealized profit and loss here is €4,000 for our European equities, and in the US we're down slightly about $100 there. Okay, quickly we'll just talk about some of our option strategies at the moment, these combination trades that we do. For those of you who don't trade options and don't understand it, don't worry about it too much. So we're going to talk here a little bit about our Apple position here. This was a short put position. This is where we were happy to own Apple at $113. It was a second part of another trade which we exited last week. But that's in profit to the tune of $41. In essence, we got paid to buy Apple at a much cheaper price than it's currently at. Apple's at about $126 right now. So we got paid in advance. If the shares dropped to 113, we were happy to buy them at that level. AMAT, that's a trade we just put on last Thursday or Friday. That trade was gone into profit really quickly. It's up $49, and we were taking advantage of a big increase in implied volatility in that particular trade. So that trade there is called a strangle. Basically, we want this stock to trade between $20 and $26 to make our full profit. And at the moment, it's at $22.50, and we're confident it's going to do that. Ford is a long call position we have. We're up $332 in that. And long calls are just a great way of going long in a particular stock without forking out all of the money to buy the shares. And that's what this is. So we have until 2016 with this particular one for Ford to rise. So it's going very, very well at the moment. Gilead here, you're going to see, again, this is what we call a bull put spread. It's in profit here. It's a combination trade, and you're always going to see a negative and a plus in a bull put spread. That's because it's two trades in one. And we're up here $31 in that particular trade, and we're probably going to make another $5 in that when it ends this week. So these are all expiring this week. So another trade that went really well for the portfolio. Moving on down, we have positions in oil. Again, we got paid in advance to buy oil at $9. We're up $77 in that. Oil's at about $11.20, that particular ETF. And we also sold a covered call on our 100 shares position, and we're up $35 in that. Another bull put spread here on Oracle. Again, you'll see two corresponding profit and loss positions here. We're up about $60 in that particular trade, and there's another $30 or so in profit to come by the end of the week. Then we have a number of trade in the S&P 500, another bull put spread in full profit here at the moment. Can't get any better. Made $104 profit in that particular trade. That was one we placed about 3 weeks ago. Again, these are high probability trades. That particular trade, when we placed it, had an 86% chance of winning. And as you can see, we've made full profit $104. And we only risked a small amount of money. It was $80 to put that trade on. And again, S&P, we've another one here. This is slightly losing at the moment. This was basically a hedge to take. We were long so much, we wanted to take some of that off, and we did what we call the bear call spread. So we want the markets to take a breather. We want an increase in implied volatility, and when that happens, this position will go into profit. So that's it for now. That's how our portfolios are performing. That's the reason why we're very smart. We diversify across a number of stocks. We're heavier into Europe at the moment than we are into the US, and all of our option positions, bar one, has been really successful. So if you want to take advantage and learn with us, we would encourage you to take a free trial of our website. Just click on the register button on the right hand side. This is Stephen Cox. This is Share Navigator. Thank you, and bye for now.